Right, it's 1 o'clock. Let's get this session going. Once again, for those of you that just joined us in the room, from my side, Cornay, it's a warm welcome and thank you for being here. And today we're talking about trend lines and formations and the basics behind it. And this is always the fun one. This is always the one that I like to dive in a little bit, because doing technical analysis is really important, and the more you study a chart, the more patterns do emerge from a particular chart, and the easier it is, or it starts to be, to make a decision of whether or not you want to get in, or whether or not you want to wait a little bit more, or what's happening within a particular stock that you've been watching for a while. So technical analysis for me is one of those fun to do things, trying to spot those trends or some of those formations that occur within any stock. Now, in our lecture modules, we clearly say this, that if you do study the charts long enough, you will tend to find that there are some form of trends or formations being formed within a particular chart. Now, it's important for every investor, or if you're a trader, to understand that you need to do a proper technical analysis in order to ensure that you're buying the share at the right time, trying to discern whether or not it's the right time to get into the stock. Now, when we talk about technical analysis and you go and look up, if you go to the share tracking's dictionary and you go and look up technical analysis, I would urge you to go and read up on it as well. If you go to our lecture modules, you'll see we've got a whole section just on technical analysis, all the basic foundations of technical analysis. So I would urge you to please do visit the lecture modules for that as well. But if you go to the glossary and you go and search for technical analysis, you'll see it says it's a school of investment assessment and thought which maintains that there are patterns present in the price and volume charts of shares which can be exploited to improve the investor's probability of making the correct investment or trading decision. Now, if you dive a little bit deeper into technical analysis, we'll see that there are three types, or three parts, let me say three parts of technical analysis which does stand out for us. And the first one is formations. Now, formations are things such as your head and shoulder patterns, reverse head and shoulder patterns, double tops, double bottoms, pennants, flags. There are dozens of these formations which we can see occur within our charts. Now, the thing about all of these formations that we see that are formed on the chart, they have been associated with a high probability of the share moving in either one or another direction. Now, when we say it like that, what we mean is that if you see, for instance, that you get a head and shoulders pattern, if it's just a normal head and shoulders pattern, and we read up on a head and shoulders pattern, it clearly states that if a normal head and shoulder pattern is formed, that we're expecting a breakdown, right? So we're expecting the share to break down and to continue with the correction, or continue to head a little bit down before it will start moving up. But then at the other end, if you've got a double bottom or a triple bottom, for instance, that is a really good sign of a great support level, which means that at a specific value or a specific level, we see that a lot of investors start buying the share. They see the share as being undervalued, right? So investors and traders alike do use support and resistance levels to try and determine the right time to get into the market. That's fortunately the thing about technical analysis. It helps you to try and discern the right time to get into the market. Now, the second one, we said the first one, the first part of technical analysis is associated with formations, while the second one is actually associated with line indicators. Now, line indicators are closely linked to the closing prices of charts, but there are different formulas out there that is being used, but things like your stochastic oscillator, your overbought, oversold, your MACD, your relative strength index, and all of these things play an important role, right? So all the line indicators that you are making use of normally under normal circumstances, these sort of indicators will tend to give you an idea of what is the sort of momentum that what is occurring within a particular stock, to see whether or not the market is overbought or oversold, to help you a little bit fine-tune what you're seeing on your chart. Because what you're actually doing as a technical analyst, when you look at the share price and you're trying to determine the formation, and let's say you do see a formation pattern occur on your share price chart, what you're going to do is you're going to use your line indicators to try and determine if the momentum is picking up or if the momentum is going down, to give you an indication of whether or not it's the right time to get in. So all of these things are or work in correlation with one another to help you to better understand what's happening with the picture that you're looking at. Now, the third part, or the third part that's part of your technical analysis is what we call the wave and cycle theories. Now, when we did the technical analysis series last year and in the beginning of this year, we spoke about the wave and cycle theories, and we did a presentation on that as well. But we said that there are many theories out there, and there are theories like your Elliott wave, your Contradive wave, your Gann theory, and many other of these theories, right? But they talk a little bit about the cycles within the market. So the cycles within the market gives you an idea, because we know that some shares are cyclical and some shares have some form of movement during a particular period of time during the year. We do note that nothing moves in a straight line. And this is what these wave and cycle theories is trying to tell us. And nothing moves in a straight line. And there are certain things that do occur within a particular stock that should be noted. That is really important, that you should be aware of it. So I would urge you to go and study up a little bit on it. Go and read up a little bit more of it in our lecture modules as well. Now, I do get this question a lot because not everyone is like doing in-depth technical analysis. That's why we get three types of traders and investors. One are basically someone that's just a fundamentalist, so most of his decisions is based off of the fundamentals of the company, while 20% of his decision is only based upon technical analysis, where a technical analyst will tend to make his decision based upon what he's currently seeing on the chart, if he wants to get into the market or not. So 80% of what he perceives on the chart goes into his decision of whether or not he wants to buy it, and only 20%, approximately 20% of his decision is based upon whether or not the fundamentals of the company is fine. But then the third type of investor, and this is what we need to be. We need to be both fundamental analysts as well as technical analysts. And the idea behind that is that you want to make sure that you are spreading your cover, not just everything, putting all your, or relying just on the technical analysis side of things, but also relying on the fundamentals of the company. Remember, ultimately investors will be driven by the performance of the company. And the performance of the company is directly linked to the performance of the balance sheet, their income statement. So basically what the profits are of that particular company within a particular year. So if we are expecting that a company is going to do well, I can tell you now that if investors get a whiff of that, or the big institutional companies get a whiff of that, share prices will continue to move up. That's how it works. When you're looking at a chart, the thing about technical analysis is, when you look at this chart, you need to be of the understanding that it's the emotions of every investor and trader what you're seeing currently on this chart. It's not just a simple line chart. It is the emotions of every investor displayed to you on a graph by a line. And this is why it's so interesting, and this is why we encourage every share tracking client to do both fundamental and technical analysis in order to ensure that you are looking at the right things, that you are making the right decisions, right? Now, don't feel overwhelmed. In the beginning, it might seem like a lot, but over time, it gets much easier. So, what is the idea behind this technical analysis? Well, the idea behind technical analysis is to help you to identify the trend, confirm that trend, and to ensure that you're buying the share or selling the share at the right time. So those are the three things that we're looking for. We want to identify the trend, we want to confirm that trend, and then we want to look at whether or not it's the right time to get into the stock. Now, in order to make sure that we identify the trend and confirm the trend, we talk about the word validation. Now, in order to validate whether or not a share is in a bull trend, or whether or not it's in a bear trend, or whether or not it's in a sideways pattern, we normally say that a share price needs to bounce or touch a support level at least twice, and then by the third time that line is touched, we know for a fact that that trend is now confirmed. So a really good example, if I can jump right into this, is if I go to Sasol as my example, and I open up Sasol for us, you'll see that Sasol is a really good indication of your support level down here, right? So you have the share price touching this between 350 to about 354 Rand, touching that level more than 6 times. So this gives a really good indication that this is a strong support level. And you'll see that at about approximately 490, you'll see that there's a strong resistance, but there's only about 2 or 3 times that it touched that level. And now it's only hovering down here at about 412, 413 Rand per share before it starts to move down again. But you can clearly see here that investors are definitely using, and let me just get my lines here to show you, that investors are definitely looking at this and saying, okay, if the share price gets down to this level, I want to be in. I want to buy if it gets down to this level. And this is why it's so important to take note of this support level at in approximately 360 Rand per share. And the same goes for my resistance levels. Remember, the resistance is where the share price hits its head, it struggles to go through that barrier and pulls back. A support level is the level at which there is support for the share prices. So as the share price comes down, it bounces off a specific level, and normally at that level that investors feel that this share is undervalued, and then you get a lot of buying going on, and that stimulates the market, and we'll see that a support level is formed over time. Now, Sasol is the best example of a support and resistance level. It's been in a sideways pattern since 2015. And we see a lot of people buying at about 360, and a lot of people at this point in time, they're actually selling their shares if it gets to about 413, 410 Rand per share. So they're in the share only for that short run between 360 to approximately 410, which is approximately 50 Rand per share gain, right? So these are things that we are looking at from a technical perspective, saying, okay, are we going to invest into the stock? Is it the right time to get into the share? You know, based upon this, the share price is trading today at about 384 per share. In the next month or so, it will be down here again at about 360 Rand per share. So buying at 384 is probably not the best decision to make, but buying it closer to approximately 360, 364 would be a better decision. And that's not based on my opinion. That's based upon the technical analysis that we're looking at. Now, before I go any further with any examples that we have, I want you to, if you want to make some notes on this, but you'll see that there are different sorts of trend lines and formations being formed on charts. And I'm going to name a few of them that you might encounter. The first one is those that we know of as the bull and bear trends that you see. And you can easily spot bull and bear trends or sideways patterns by the use of either line indicators or your moving averages. Then you'll see you get things like your breakouts, you get channels, you get double tops, double bottoms, triple tops, triple bottoms, head and shoulder patterns, reverse head and shoulder patterns. Then you get your V top and your V bottom, saucer tops, saucer bottoms, and triangles. Now, don't let those big words make you confused. Things like your saucer tops and saucer bottoms are things which we call gradual gains or gradual falls within the share price. So the share price gains value over a long period of time, but gradually, right, with no sudden spikes. And when we look at saucer bottoms, it means that we're looking at the gain section of it, and saucer tops are gradual losses in share price value. So all of these things play an important role and that we need to take into consideration when looking at this. Now let's jump into our examples this afternoon so that I can show you some of the things that you can go and look at for example purposes. If we go to First Rand, we touched on Sasol just now, but if you look at First Rand, you'll see that we have, at this point in time, we have a resistance level at the top here. You'll see if I just get my, let me just get my crosshairs quickly here. You'll see here right at the top, we've got a resistance in an approximately 57 Rand per share. That's the highest level it went to. Now, there's some form of a double top here that is occurring, and this is because of this too. If you just focus on this level over here and this level over here, now if you join those two lines with the horizontal line, like so, you can clearly see that there's some sort of a resistance if the share price starts to move above 57 Rand per share. So as soon as the share starts to hit 57, this gives me an indication that it wants to start going down again. Now, this is normally not a good thing, and it can mean that there might be some form of downwards movement that might lie ahead. But then obviously you also have this upwards motion that is occurring, and this is happening over here. And this is where we see this sort of a wedge being formed. Now you'll see that you've got your resistance level at the top, you've got your support level at the bottom. Remember, we want the line to be touched at least twice. So it touched this level once, twice, and now the share price seems like it wants to move in between these levels. So it seems like it wants to go up and down, up and down, and up and down. Now, the thing is, depending on whether or not it breaks above this resistance level, if it does break above that resistance level, then we can expect a strong rally upwards. So we can expect, for instance, FirstRand to rally quite substantially. But if it breaks below this bottom support level, so if it gets into that level, in between this movement, and it breaks below that level, then we're expecting a significant drop in share prices before it will start to move up again. So then you can actually expect the share price to actually rally all the way down to about 40 Rand per share, and maybe even lower than that, depending on how the markets react to that breakout. So here you can clearly see the wedge being formed. There's resistance at the top. If you draw this bottom support level here, you'll see it forms this wedge, and it seems like FirstRand is now moving in between this wedge, so you can expect share prices to move between, let me just get crosshairs here again, between 49 Rand per share and about 57 Rand per share. So it's going to move between 49 and 57 for a while before we can expect the breakout. It might occur even a little bit earlier, but it's all dependent on how the markets are going to react to this. The next one that we can look at, which is quite interesting, is if we're going to look at ShopRite. ShopRite's quite interesting. It had a weak period where it had significant losses. In 2012, it actually peaked out over here in 2012. Then it went into a correctional phase after this strong period of gains. Obviously, nothing can continue to go up like that. At some point in time, there needs to be a correction, and a correction did occur within ShopRite share prices, and that correction lasted since 2013 up until 2016, which was approximately 3 years. So in that 3 years, a correctional phase occurred, and now the share bottomed out in 2016 and started to move up again. Now you can clearly see that there's a strong upward trend, and this is shown to you by this black line. There's a strong bullish trend, but within this strong bull trend, there's obviously corrections. So corrections are things that we look out for. This is normal. So if you see something like this happen, this is normal. We're expecting corrections to occur. And if a correction do occur within a stock and you do spot it, you need to be aware whether or not this underlying upward trend, this upward trend that you're seeing, is this upward trend still intact? So what do I mean when I say is it still intact? Did the share prices break below this level? But not just break below this level, it should break this level quite substantially and continue to trade below this level. But so far, ShopRite is showing us signs of growth. So for any technical analyst sitting out there, they're probably watching the stock, you'll probably want to get a buy-in at about 209 Rand per share, or you can get it a little bit cheaper at about 200 Rand per share, where it will touch this underlying support level again. So this is something that technical analysts are looking at when looking at ShopRite. The next one that we're looking at is SAP. And you can clearly see on SAP a head and shoulders pattern currently being formed. Quite interesting. You'll see the support level. This is how a head and shoulders pattern will tend to form. You'll see, first of all, let me just get a line here. You'll see, first of all, the left shoulder being formed, then the head, and then that is followed again by the right shoulder. Now, with a head and shoulders pattern like this, with a head and shoulders pattern, a normal head and shoulders pattern is telling me that we can expect a breakdown. So we're expecting the support level to be broken, right? So we're actually expecting the share price to pull back a little bit more. And if you do a little bit further technical analysis study, you'll see that the share price might break all the way down to approximately in the region of about 60 Rand per share before it starts heading up again. So it can go as low as 60 Rand per share. But this is a really good example of a head and shoulders pattern being formed. You've got your support level, your left hand shoulder, your head that's sticking out, and your right hand shoulder as well. Now with this head and shoulders pattern, as I said, if the support level is broken downwards, you can really expect SAP to continue to head down to almost about 60 Rand per share if we do that. I did touch on Sasol as well, but I want to talk a little bit about a breakdown. This is something that we see quite a lot in sideways movements or in sideways patterns. But here you can see the breakdown that occurred with Bright, and all of you know Bright. Bright is a financial institution which is owned and managed by Christo Wiese. And within this financial institution where they are managing clients' funds, where they are buying and selling stocks, buying up companies, and then selling them for a profit, reinvesting into new ventures, building those companies up. We saw that Bright outperformed the market in 2014, and in fact, this share rallied since 2010 up until 2016. It had a 6-year period of growth and substantial growth up until a certain point, right? So up until a point where the markets got saturated and the market said that this share is overvalued, right? And then the share went into this sideways pattern. Now, if you do spot a sideways pattern, this is something that you always want to look at, because depending on whether or not the share price breaks above the sideways pattern, meaning it breaks that resistance level, that top level, we can expect the share prices to continue to go up. So we're expecting a breakout. But if the share prices breaks this bottom level and this breakdown occurs, then you can expect the share to continue to fall all the way down to where investors will then try and figure out where is the next support level. Now clearly you can see that investors tried to figure out whether or not this was the next support level, and you'll see here there were a few places. First of all, you'll see a little bit of a pullback over here, a little bit of a pullback over here, and then over here. Obviously, those three didn't work. There was not sufficient support in all of these three levels over here. And then the markets went all the way down, and it touched in the region of about 75 Rand per share, which was a really good support level. Then the markets reacted to that and started to go up. But then there was a sell-off again on the share price, and it went all the way down. It then tested the next level, which was down here. And we can clearly see that the market is not done yet. So what you can expect from Bright, for instance, if you're looking at the stock for a buy, the next level that this share is going to test is going to be in the region of approximately 46 Rand per share, between 46 to about 47 Rand per share. And this is what's so fun about this technical analysis. When looking at Bright, which is at a potential buy for future gains, this share is so low in value. At its highest point, it was trading for approximately 170 Rand per share. It's trading today at 54 Rand per share. It's 1/3 of the price it was. So it's quite significantly downwards. Now, another thing that a lot of you also spot within within these patterns is the sideways patterns, not just that, but the pennants, the flags, and the wedges. Now you can clearly see some pennants. This is Mondi M&D. You can clearly see the pennants being formed. Now a pennant formation it looks like a flag, right? It occurs where there's a strong upwards movement in share prices. Then share prices start to move in between these two levels. It forms almost like a wedge. And then depending on whether or not the share prices break above or below the support level, right? So if it breaks below the support level, the share prices will go down. But if the share price breaks above the resistance, it will continue to rally. And that's exactly what it did. It formed this pennant. It broke above that level. There was a rally upwards. And then once again, you'll see this sort of pennant flag formation being formed as share prices moved in between these levels. And once again, a breakout, and share prices made a new high. Now, this is why it's so important to do technical analysis. And this is what I want to end off with for today and leave you with. You need to understand that when you're looking at technical analysis, it's a broad spectrum of things that you need to look at. These are things that you will only learn over time, but you need to study up on all the different formations that can form. Your eyes will definitely, if you open a chart, you will immediately spot the formations being formed within the chart when looking at it. I would always urge you, if you want to try and figure out if it's the right formation that you're looking at or something that's occurring, a great way to start out is to put your chart on a line chart. Then only after you've drawn your lines, you might want to look at a candlestick chart. Remember, with a line chart, you're only focusing on the closing prices. So from an investor's perspective, I like working with closing prices. But for traders, you would tend to use candlestick charting because there are formations being formed within candlesticks as well. Now, I'm not going to touch on the different candlestick formations. We're going to touch on that next week when we're going to look at candlestick charting, and we're going to look at the different candlesticks that are formed and that you can look out for. But this is basically the basics of the different technical analysis that you can look out for, the different trend lines and formations on the chart. So I would encourage you to go and look at that. And should you have any questions, please do contact us on 012-940-0800. Just that number again for you, 012-940-0800. From my side, Corné, thank you very much for joining us for this afternoon session. It's up until tomorrow. Remember to register for tomorrow's webinar, also starting at 1 o'clock. Enjoy the rest of your day. Bye-bye.